Hello, everybody, and welcome to Confessions of a Market Maker, Market Recap Edition. I'm your co-host, Ray, aka Zohan's Disciple, and I'm joined here by my co-host, the inventor of the pet clothing indicator, JJ. And we're here to recap the market and the news surrounding the week of October 28th through November 1st. JJ, how'd the trading week go for you?
That was a good week. A little bit slow. Definitely had to sort of wait it out on a couple of them. Boy. But it was overall, all in all, a good week.
Good. You know, for me, I wasn't able to I feel like I wasn't seeing things this week. And it could be, like you mentioned, the price action felt very slow at times. I mean, also just being in uncharted territory, I didn't trade much, but, I got the screen time. So, that's what counts. And so, yeah, we're at all-time highs now, Jay. Uncharted.
Definitely. Uncharted territory. Yeah. And, when we have markets like this and, when you have gaps and things like that, sometimes it takes a little while for the market to really sort of trade out and tell us what it's going to do. And it did a lot of that over the last couple of weeks, really. And last week, sort of gapping and holding and gapping and holding. But, all the while, thankfully, we've been taught by people to see where value is developing, and it kept developing higher and higher. So we just kept going with it.
Mm-hmm. Yeah, for sure. Now, I guess the tough thing for me, and I'm sure a lot of people, and I know you've talked about this, in our room, when we're trading in no man's land in unexplored prices, what's a good strategy? How do you approach it?
Well, what I do is I like to take a look at a range, and I was taught by Shadow Trader that when you break out of a balance range, you double it, and you sort of look at the top of that range for a target.
Mm-hmm.
And that's really, really helped me in my trading, especially when this market keeps going into uncharted territory. Today we had a couple of references that I had calculated from that, and they were quite sticky. We had two price levels that we were able to trade around in uncharted territory. At first, I told everybody, let's take a look at these, levels and see how price reacts at them. And if they're responsive levels, then, maybe we'll take some trades off of them later in the day. And it turned out to be pretty good. Even though it was kind of a slow, grindy day, there were, two nice levels in our charts that work nicely. But you had to be a little bit patient. You had to sort of, definitely patience was was definitely needed.
Yeah, absolutely. It was good. I think a good week for me, learning wise, even though the trading wasn't great. You just watching, it's ever evolving, ever changing. And, I want you to talk about, because this is something you spoke a lot about this week, about how price reacts at certain levels.
Definitely. It's a very tough concept, and it took me a long time to figure out. When I started getting into this ES trading, I was on Twitter, and there's a lot of people who publish levels, and some of them are accurate and some of them are completely not. And I've always find it difficult just blindly trading a level, just like buying a level or selling a level and not having any sort of a context around it.
Yeah.
So when I started coming up with my own, and it's funny because some of the levels that we've come up with are pretty darn accurate, to the tick almost, or one or two ticks.
Mm-hmm.
And everybody just kind of obsesses over that. And they're like, how did you get that level? How did you get that level? And I'm like, that's not really the important thing. The important thing is, how is price going to react around that level? Is it going to stop there? Is it going to get front run? Or is it just going to ignore it?
Yeah.
And that's what we look at to see how price action reacts. And today it really, I noticed that we had a couple of levels where, like at that, where was it at? 58.25 was really responsive today. And, even went on a pullback. We were able to take a long off of that, it was to the tick. And 62 3/4 seemed pretty responsive for most of the day when we put in our high earlier there. And I think it was an I period. We got 2 ticks over it. So just things like that. It's, you'll come up with something and then, I test it. I really like to look at it, kind of like an experiment. And that way it sort of helps take some of the pressure off of you. You kind of sit back and watch and see the market develop and see how price reacts around areas or levels that you think are important. And if it works, then you can trade off of them and you can use them going forward to lean on.
Mm-hmm, for sure. Now, heading into the news, Federal Reserve cut interest rates by a quarter point. And while we're at all-time highs, what implications could this have for us, JJ, as traders?
Well, everyone was happy about it, except the people who were short. Uh, I am not the world's greatest economist, but I do know that when you have cheap money in this system, asset prices keep getting higher and higher. And, we definitely saw that today. I think Apple closed at its all-time closing high or something like that. Pretty impressive when you have these massive companies with huge floats and that kind of buying to take these deals up. So let the party keep going.
A lot of people have been caught short this week, though.
Yes, I've been warning people, that into year end, into earnings season seems to be so far okay. There's not a lot of companies that are missing earnings. The climate seems to be okay. A couple of weeks ago, everyone was talking like it's the end of the world. Now you look into the financial press and they're starting to, you can see the greed. You can feel the greed. You can feel it when it goes from fear to greed.
Yeah,
And it happened pretty quick. It happens pretty quick. All you need is a week of price being accepted at a certain part of a certain range, and people are like, yeah, maybe this isn't so bad. Maybe maybe we should get in on this. It's almost just like in Trading Places when those two guys see the Dukes cornering the orange juice market. They're like, hey, the Dukes are going to corner the market. Let's get in on it.
right. Right.
That mentality's here.
Yeah, no, thanks to your pet clothing indicator. I'm able to identify this. The only indicator I use. Yeah.
I still can't believe people spend that kind of money dressing up their pets for Halloween. It boggles the mind, and that's all I see on Twitter are dogs in costumes.
Yeah, it's ridiculous. I feel bad for the dogs, but that's a whole other story.
Well, yeah, it's
that's for another episode.
That's for another episode.
Ray's hot takes, dogs and clothing.
Mm.
Anyway, so this week wraps up another week of earnings. I think there's 1,124 companies reported, Apple, Facebook, Boeing being among them. I think I saw, JJ, 70% of the companies, or probably even more, have reported positive reports. So, JJ, when's the next depression coming?
Oh, jeez. If I knew that, I would be with the Grey Poupon crowd in St. Bart's, on my 400-foot yacht, and things would be much better.
Yeah.
Maybe one of these days. I don't know, but what I do know is that there are a select group of very, very deep-pocketed institutions that are driving this market higher and higher. And what I do see is them encouraging retail to get back into the market, like buying fractional shares in Amazon, trading micro futures. I see new exchanges trying to pop up for the smaller investor. So they're trying to bring retail back in because they've realized that they're the only buyer and they need to hang this paper on someone to get out of it. So I still see the party continuing until these guys have developed enough of a market that they can sell into.
Yeah. Wow. Yeah. No. It's just real interesting. I always appreciate your perspective because you give me someone like myself. I would not. These are things I wouldn't. I don't know how institutional people think. And so being able to like have a holistic view of everything is
Well,
good.
the thing is, there's a proviso. I didn't go to Harvard or Wharton. I don't have a degree in economics. I've never worked at Goldman Sachs, that sort of thing. The way I look at markets, and I've been taught by, you know, some pretty villainous people. And, but the nature of the beast is, whether it's, trillions of dollars or billions or millions, is to sell something that you bought cheaper to retail at a higher price. And in order to do that, you have to get people comfortable with paying higher prices for things.
Mhm.
And they're doing a wonderful job of it.
All right. Yeah. Yes, they are. And so with that, that's going to conclude this market recap episode. If you guys enjoyed this podcast, rate and review it for us. If you're interested in learning market profile, if you're interested in trading a liquid market, if you got a small account, come join us at microefutures.com. JJ, parting words?
No, it's been a great week. Speaking of the room, it's been really wonderful. I've been meeting some really nice people, and it's nice when people, when the light bulb starts going off and you see people getting it, and being able to see a market properly, and stay out of you know the mouth of the shark. And I really appreciate all the support that we've gotten over the last couple of weeks. It's nice.
Definitely, definitely. And I really enjoy the community. It'd definitely be a lot different trading just solo by myself at home, having people to
Mhm.
talk to, laugh with, bounce ideas off of, listen to you, get inside your head is great. Really enjoy it. So for the man who masquerades around Minsk, I'm the man who's gallivanting through the tropics. You guys stay safe.
Have a great weekend.